Hello everyone and welcome to my morning report analysis videos on Friday the 3rd of August with me, which is Pair Market Analyst at Hantec Markets. It's Non-farm Payrolls Friday. There is a strong dollar move that is coming, or has been coming, in the last couple of days. You've seen that the rhetoric around the trade dispute between US and China has sort of been blown up again by the US with this talk of increasing the tariff from, or the potential tariff on $200 billion worth of goods into the US from China from 10% to 25%. That subsequently has led to another renewed sort of selling pressure on the yuan, which has driven the dollar higher. You can see the dollar pulling higher in the last sort of couple of days, and that has sort of played out through the forex majors. Interesting that the yen is still fairly sort of solid though. I'll talk about that in my analysis videos in a bit. But the other factor here is this underperformance of sterling that continues to pull through the markets. Bank of England rate hike yesterday didn't do anything for sterling whatsoever. A little pop to the upside, about 20 pips or so, and then Mark Carney was sort of more dovish in the press conference, and subsequently sterling has fallen now below 130 big figure, closed below that. You're looking at 129.55, but I'll talk about that in my trade videos as my trading videos, analysis videos in a bit. So it is payrolls day today. Non-farm payrolls are expected to come out at 190,000. Not really the focus though for the market. Always tends to be pretty strong jobs growth. What we are looking at is this little number here, 2.7% on the average hourly earnings. Now, average hourly earnings, as you can see on this chart here, have now started to fall below CPI, which is not good for the consumer. So we'd need to see average hourly earnings picking up, and that would help to strengthen expectations for further rate hikes going forward. However, the expectation, as I said, is 2.7% again. So this could become a bit of a concern if inflation continues to increase in the States. Certainly is a driver. Inflation is a driver behind the rate hikes in the States, but you need to see average hourly earnings picking up as well to suggest that the consumer is going to be able to cope with that inflation. So that is the focus today. You've also got the services PMIs throughout the day. And you've had the European composite PMI 54.3, not bad, not great, but not bad. UK services PMI at 54.7 is the expectation, and then the US this afternoon still very strong, 58.6. So yeah, quite a lot to go on today as we sort of look forward to payrolls, but certainly the markets are sort of looking. Let me show you how the markets are doing. Where are the markets? There. Sorry. Yeah, we've still got equity markets are positive. We had a bounce into the close yesterday on Wall Street. Little bit of a sort of stalling in that bounce on S&P 500 futures today, but probably in front of payrolls, that is. But yeah, you've had a nice sort of little rebound. I say that little rebound because DAX was sharply lower yesterday on the European markets, bouncing today. But yeah, generally speaking, payrolls not going to get too much direction. So my chart today is Euro Swissy. Now, Euro Swissy, I spoke about this previously, whereby the market had been in this uptrend, and then it sort of retreated to the uptrend, and then started breaking the uptrend. And I was talking about 116 big figure being a pivot. 116 big figure, time and time again, has been used as a pivot in the last 6 weeks. And again, if I zoom in here, you can see that having broken to the downside of that pivot, it then became resistance on a consistent basis, and we've now pulled away from that. So you're now building this trend to the downside. It certainly looks as though the momentum in the correction is building. Look at the RSI below 40, the MACD lines gaining traction below neutral. Stochastics negatively configured. It certainly looks as though the market is going to be in retreat mode, and looks like a test of this 1475 reaction low from June could now be on the card. So selling into strength within that uptrend. You've got the consistent run of low highs, low lows, moving averages. This is all on the hourly chart, sorry, by the way. Low highs, low lows. Momentum indicators really are quite negatively configured now. any sort of rebound is being sold into. And yes, you've got the initial resistance 1560. Well, I suppose you could argue today's high is initial resistance at 1540, but 1560 is that old support, now becomes new resistance. That happened yesterday. And then above that 16 big figure, which is that pivot on the daily chart. So yeah, looking like we're going to get further weakness. So with that in mind, wish you good luck in your trading, and I will speak to you later.